But now JPMorgan is allowing clients to pledge Bitcoin and Ether as collateral for loans. Leslie Picker is joining us now with details. Hi, Leslie.
Hey, Morgan. Yeah, and chatting with sources familiar with the matter, I'm told it's still early days. And for now, the concept is limited to the firm's trading business. JPMorgan's trading business has, for a few months now, accepted IBIT, the ETF, as a form of collateral, which it sees as less volatile as the underlying currency. However, I'm told that certain hedge fund managers and asset managers are demanding more of these types of crypto services, although, again, I'm told that offering Bitcoin and Ether as collateral for trading is not imminent at the firm. While many remember, as you mentioned, Morgan, Jamie Dimon's comments about Bitcoin being, say, a pet rock, he has moderated his tone recently. Here's what he said when I asked him a few months ago about the firm's increasing overlap in crypto, including a Coinbase partnership and the stablecoin-like token JPMD.
If the customers want to use it and how they use it and it's used properly, we'll be doing it. It's what the customer wants. It's not what JPMorgan personally wants.
JPMorgan declined to comment, but this is a space to watch because although it's early days and so far isolated to the trading division, it could ultimately expand to other areas of the business, whether it's corporate or asset management or even consumer. But again, early days still here, but still quite interesting, guys.
It's early days at JPMorgan, but I wonder when you have, the world's biggest bank now wading into this, what it's going to mean for the other financial services and banks that are already in this arena, as well as some of the crypto banks.
Yeah, I think usually the way it works is if a client gets a certain service from one bank, they ask if it's available at the other counterparties it's also doing businesses, other prime brokerage divisions and so forth. And so this is definitely something where JPMorgan has heard from, as I mentioned, the hedge fund managers and asset managers as a service that they want. And the firm has kind of been of the mindset recently that if regulations allow for it, they will explore it and figure out what they need to do to make it happen. The bigger question comes from kind of a risk management standpoint, which is that Bitcoin and Ether are more volatile than typical types of collateral. So you have to take a certain size haircut in order to make that feasible from a risk management standpoint. And that's kind of where the exploration happens right now, to see exactly how much more they need to hold in collateral in order for that collateral to be made up of, more volatile securities.